Good morning, everyone. Thank you for joining us today as we go through our cash books and annual statement training. Today's webinar will earn board attendees 3 credits for attending. We will get an attendee list at the end, and we will send that over to Rose, and she will update your credits in Prosper. If you have questions throughout the presentation, feel free to submit them in the Q&A, and I will read them off to our presenters. And any other questions, feel free to submit them in the chat, and I will try to respond to them. But for now, I will hand it over to our Executive Director, John Parsons. Thank you.
Thanks, Natasha. Good morning, everybody. We have over 150 attendees today, or roughly that number, so we're glad to see so many people in attendance. As you know, this is an annual training that we do each February to discuss the annual statements. We're also going to talk about cash books. So we'll present not only on the substance of those reports, but we're also talking about the new procedure in Prosper that will be rolled out around March 1st for filing of cash books and annual statements going forward. So as you know, we've continued to try to add functionality to Prosper, make it better for record keeping, save on paper, and allow communication back and forth, so you know when documents have been filed. You get a record of anything that is incomplete that we're looking for information on. So that will be a work in progress this spring, and staff and our help desk will work with anybody that has any challenges in submitting those documents. So just a couple housekeeping matters that I wanted to touch on before we start our training. We have a Administrators Day coming up in March the 28th, down in Norwood at the Sheridan. We did 2 administrative trainings the second half of last year, as you know, out in Northampton and up in Danvers, and the folks from Boston South and Boston West were feeling scorned and asking for a Administrators Day closer to their region. So that is the upcoming Administrators Training Day. We expect to see those folks from Boston South and West in attendance. Any new staff, new board members, that's who it's designed for. It's open to anybody, obviously. It's credit worthy as well, but you will find that the information is geared towards new staff and new board members. The other thing I just wanted to touch base on, because we've had a lot of inquiries about the open meeting law. As you know, we've been following the COVID open meeting law rules for the past 2 years or more. There is a deadline of March 31st that will sunset those provisions. There has begun to be talk up on Beacon Hill about either extending those or making permanent some sort of hybrid ability for agencies and local and state level to be able to utilize remote participation and by board members and communities. We have nothing to update at this point. I do expect that before the end of March, they will either extend that deadline or probably less likely they'll have a compromise that's already in place. So as soon as we know something, we will pass that information on to everybody through an email blast out to all your staff. So that's what I wanted to update folks on. I want to introduce 2 presenters today, Scott Henderson, Deputy Audit Director, and Sarita Yee, who is investment analyst for many of the boards and also serving as a compliance analyst in our investment unit as well. So they will be presenting, and Sarita is going to kick it off for us. So enjoy, use the chat feature and raise your hand feature if you have questions, and we'll try to answer them as we go along. Thank you. Sarita?
Thanks, John. Good morning, everyone. Welcome to today's cash book and annual statement training. I'm going to be kicking it off with the cash book training. just a few pointers. I think most of you have noticed that there's a Q&A section and a chat function. So just want to remind folks that if you do have a question, be sure to send it over in the Q&A section, and feel free to just type your questions as you feel the need during our presentation. Next slide. I know today's audience is here mainly because of the new Prosper training, but we do hope that you find the cash book and annual statement piece as a good refresher as well. So kicking it off, just as an overview of the cash book section, I'm going to be going over some reporting requirements and components, what we do when we receive the cash books, as well as touch on preparing for year end, specifically the accounts receivable and payable process, and also provide a brief refresher on what were new expense accounts, the carried interest, equalization, and miscellaneous investment expense accounts. And then we'll go into the summary. Reporting components. The primary components of the cash books comprise of 5 reports: a year-to-date trial balance and month-to-date ranges of the cash receipts, disbursement, adjustment, and general ledger report. Just sample date ranges for this: your year-to-date trial balance would be 1/1 through 9/30, and the month-to-date report should be from the 1st of September to 9/30. The general ledger report was added as of memo 16 in 2019. Additional components include the investment manager statements or pool fund worksheets in lieu of a copy of the manager statement, custodian reports, and consultant statements if applicable. Next slide. December and year-end reporting are a little bit different from the other months in that we do ask for almost 2 sets of cash books, a set of pre-closed books, which reflect before closing entries. And this is just your typical, a normal 5-component cash book package. It's and it should include everything up until but before you post your closing entries. Once you've closed the year, a set of post-close books are also required, and this is just the year-to-date trial balance and a year-to-date general ledger. We don't need additional copies of the cash receipts, disbursements, or adjustment report as part of the post-close package. The pre-close, before submitting your pre-close books, sorry, Natasha, if we can go back one. Before submitting your pre-close books, we do expect that they should reconcile to the assets, liabilities, receipts, and disbursement accounts of the annual statement when that is submitted as well. The post-close books, we don't do as in-depth of accounting analysis on it. It's really mainly to indicate to us, PERAC, that you have in fact closed out your year. Next slide. Now I'll go into some important due dates. The monthly cash book packages are due within 4 weeks of the close of each month per 840 CMR. And starting in 2019, we started up a cash book reminder notice where we do issue formalized emails and letters when boards do reach a certain past due date. So kind of a refresher on that process. If you are, or the board is over 45 days late on cash books, a first notice will go out as in the form of an email, and it will be sent to the cash book preparer or admin. Should that board reach 60 days past due with no response to that first notice, a second email will be sent to the chair as well as the admin. And lastly, if a board reaches 90 days late with no response to any of the prior notices, a physical letter, suspension notice will be sent to the chair. The board members and the admin will also be CC'd on that. Next slide. So with regards to how to submit cash books currently, as you all are aware, we are receiving cash books, or they're being sent to the PER cashbooks@mass.gov email address, as well as you're CCing your respective PERAC investment analysts. And we ask that you continue to send in any remaining 2022 reporting to that email address. But starting with January 2023, that files will be uploaded to Prosper, and we'll be going through that process a little bit later in this presentation. But just want to remind folks to continue to send everything for 2022 to that inbox. The Prosper process will be replacing the inbox. I know I've gotten a few questions about that already. But we'll get into the Prosper piece a little bit later in this presentation. With regards to the other components, the manager statements, custodian reports, and consultant reports, those should continue to be sent directly to your PERAC investment analyst. This won't be in effect much longer, but they should not be mailed to the PER Cashbooks inbox, and they should be sent directly to the analyst. Should you feel you want to continue using the pool fund worksheets in lieu of copies of the investment manager statements, we have provided this link here. Next slide. I think we went back one, Natasha.
Sorry, I accidentally clicked on the link and it took me out of PowerPoint, so I will make my way back.
If folks feel they want to run through of the pool fund worksheet, we can do that too.
One more slide, one more
Yes.
page, right?
Mhm.
Okay, here we go.
So that kind of concludes some important reminders, due dates, and what the cash books package is composed of. Now we'll get into what we do with the cash books once we receive them. First thing we do is we do a preliminary check on just the reporting that was received. We perform what we call a trial balance flow check, just to ensure that where we left off at the prior month, adding any activity reflected in the current month adds up to the year-to-date activity, total activity that's on the trial balance for that month. So in this example, we left off January at 7.8 million of total activity posted. We add in total activity coming from the cash receipts, disbursements, adjustment journal, and we're expecting to see 12.4 million reflected on the year-to-date trial balance for February. So you can see that trial balance does reflect that. There are no variances, and that gives us the green light to go ahead and go forward with our analysis. Once the trial balance check passes, we perform a cross comparison of the assets after we've received the manager statements, custodian statement, and consultant statements. We verify that the activity reflected in all three are also reflected on the trial balance and general ledger report for that month. In addition, we also track the clearing of accounts receivables and payables. Mainly this is coming from prior years Schedule A. And we also review and track the performance on a monthly, quarterly, and annual basis. Now we'll go into some recommended accounting practices and tips and kind of like issues that we've come across in our reviews. In this section, I'll touch upon the year-end preparation on the setting up your accounts receivables and payables. And then also, once you've gone into the following year, our suggestions on how best to relieve those payables and receivables, as well as touch upon those private equity investment expense accounts. Now that we are in the midst or preparing for year end, you do want to start the process of making sure anything that was incurred or activity that's incurred this year but won't settle until next year, you should be taking into consideration to set up a receivable account. Some things that will go into this are member deductions. If a paycheck is in December, but withholdings aren't received until January. Appropriation payments will also go, should be set up as a receivable if you're not expecting to be paid until January or after. Retirees also show up here too. If you're waiting for an estate of an overpaid retiree, you should be setting up a receivable. Next slide. Some additional items that should be going into consideration are setting up a receivable for creditable service purchases. If your board does allow installment plans, and if there are either a significant number of members or dollars involved, a receivable should be set up. Just a tip on this, you should be tracking any remaining balances, making the total still owed easily identifiable. The use of sub accounts is highly recommended in this case. As well as, and lastly, any open trades, any open sales where trade date is within this current calendar year in December, but won't settle until January. With regards to accounts payable, things to consider setting up a payable for are any fourth quarter investment fees that won't be paid until January, utility or legal fees. With regards to retirees, if there are refunds due, or if an uncashed check has been voided, you should be setting up an accounts payable. And then also any, again, open trades, if there are any open buys with January settlement dates, a payable should be set up.
Sarita, I have a question here for you. What about 38C receivables?
Those, I can look into that. I think that would apply if it's a significant number of members, or if they're, the dollar amount is sizable, that should also be set up as a receivable. If you are, essentially, I think the general rule is if you are aware that that activity has incurred within the calendar year, and you know that settlement of it is not, it won't be settled until the following year, the recommendation is to set up a receivable for it, or payable, depending what it is. So once everything has been, you've posted all your receivables and payables, you're set to close out the year. You're closing out 2022, that information will transfer to your Schedule A, and also transfer over and become the beginning balance of your 2023 trial balance.
So I don't know if Scott wants to chime in here. A question has come in that he has said no in the past, but they are material for every board.
Well, I just think setting up the 38Cs as payables and receivables gets a little tricky. I mean, the receivables aren't tricky because you know exactly how much you're going to bill out, but the payables, you don't know who died. So you end up usually overestimating it, and trying to clear out the remaining payable leads to incorrect entries. So I still tell people not to accrue for those.
Okay. Thanks, Scott. Now we'll go into just kind of recommended procedures for relieving those receivables and payables that were set up at year end. In this example, we see as what we deem a single entry method. And in this, here you see they had management fees set up, accounts payable for management fees, and here they are settling them down or paying them out. And then the entry is just a single entry against the accounts payable and cash to clear out that management fee. There's the green check mark here because it is our preferred method. Next, we'll go into what we call a double entry method. And shocker, we call it double entry because there are two entries for it. In this example, we see legal expenses were kind of accrued as payable at year end. And the X kind of blocks it out, but you'll see that they posted an entry, but instead of to the payable account, they posted it to legal expense in January. And then later on in March, realized that is related to a payable that they had set up in prior year, posting a secondary entry, declare it out of the payable account, and also offset the legal expense that was posted in January. Because there are timing differences between these two, the double entry method, and there's just 2 entries to get to the same result. This is the reason why we do recommend clearing your receivables and payables using the single entry method. Now we'll go into kind of a refresher on private equity expense accounts. I know a lot of boards now are invested in some private equity investment funds. And starting in, I believe, 2019, we created, or 2018, we created new expense accounts to kind of be able to put those related fees into the correct bucket. So first, we'll go over the carried interest expense. This 4701 account, it will represent incentive allocations paid to the fund's general partner. It is dependent on how well the fund performs. So if the fund performs well, it will usually show up as a negative amount on the statement, in which case posting it, you would post a debit entry to the 4701 and a credit to the asset. However, if the market's not great or if the fund doesn't perform well, it would be vice versa. A credit entry, it would show up on the statement as a positive amount, and a credit entry would be posted to 4701 and a debit to the asset account. Equalization expense. These are also oftentimes called true-ups, and this expense represents the adjustment or equalization of fees across all shareholders as if they had joined the fund on its initial closing date. As you can imagine, this doesn't happen as often, or you won't be recording it as often as a carried interest expense. It's only when during initial subscription into a fund, or if after the fund has closed, they have a subsequent closing and additional investors invest in. It is usually a debit to the 4702. If your board is joining a fund and during a subsequent closing event, you will be incurring equalization expense to join the fund. And that is going out to all the other existing shareholders of that fund. However, if you are already invested in a fund and they have subsequent investors come in, it will be a kind of like the equalization expense will be paid to you as an existing shareholder. And for that, you will post a credit entry to the 4702 and a debit to your asset. And lastly, we also have the 4703 miscellaneous investment expenses. And this will just include anything that is not deemed a management fee, carried interest, or equalization expense. This could include anything from trade fees, professional fees, or anything deemed other on the statements. And this will always be a debit entry to the 4703 and a credit to the asset. And just because it is a lot, and just to provide a few sample statements as to how it will look and where to find these fields within the statements. Here we have an example of a PERAC statement with some fields highlighted. We can see here that for PERAC, the income and expense line is on the same line. It is income for this. The carried interest also shows up in 2 lines, and it was a positive amount on this statement. So you'll see that it is a credit entry on that sample entry there. We also have an example of an IFM statement. And this statement, as you can see, definitely provides more detail. I'm not sure if you can read it, but the carried interest line is also called incentive allocation fees. So there are different names for it. So if you're not familiar, they do have different names. And here they actually break out their miscellaneous expenses in detail. In this one, you'll also see that the carried interest is they provide the amount to post for that period or the change for that period. on the bottom of the statement, you'll also see that they provide a detail or a running tally of the actual ending balance for year to date or quarter to date of carried interest accrued for this investment. So not all statements will provide this, but just wanted to provide some examples of where to find this information on the statements. And lastly, just to provide an example of equalization expense, we'll see that for this initial subscription in January, there was what they deemed it a true up of $388,000 based on a $10 million subscription. So the related entry is on your left there, and it only corresponds, that entry is an example just for that January subscription. I know that this statement has additional periods on it, but that example is only to record the initial subscription into the investment. So that kind of wraps it up for cash books. In summary, cash books are due within 4 weeks of the close of each month. The monthly cash book package consists of 5 core reports: the trial balance, cash receipts, disbursements, adjusting journal, and general ledger. In addition to those PTG or those accounting books, records, the manager statements, custodian statements, and consultant reports are also required within 4 weeks of receipt by the board. Copies of those statements should be sent to PERAC as well within 4 weeks after the board receives it. With regards to accounts receivable and clearing, ensure that you are posting all of that activity prior to closing out your books or rolling up. And then when you go into the following year, just a reminder that the single entry method is preferred. And lastly, for the carried interest, equalization, and miscellaneous expenses, they can be tricky. The statements can be tricky to read, but they are definitely not impossible. This concludes the cash book portion. Not sure if there are any additional questions before I turn it over to Scott.
I have one question for you, Sarita.
Mhm.
What did you say you need for post-close cash books?
For post-close, it's not all 5 reports. We only need a year-to-date trial balance and a year-to-date general ledger report.
Oh, one more came in. Do you
Mhm.
see that one? If
Yeah.
waiting on investment statements for 2 to 3 months after a quarter, how can we issue cash books in 4 weeks?
So for this, I kind of refer to just the process of you are recording the activity as you receive it. So typically if it's 2 to 3 months after, it's usually a private equity holding. That often happens. If you are, a lot of the boards, if you are closing the year on a 9/30 statement, but also including any like calls or redemptions or distributions for your 4th quarter in that is fine. You just want to be sure. It gets a little bit tricky when you are changing your accounting process. So my tip to most boards is just to ensure that within a calendar year, you are recording 4 quarters of activity. So whether that consists of Q4 of prior year through Q3 of current year of market value and activity for that particular investment. But that is up to the board to keep track of where they've historically ended their year. If they ended prior year out with a 9/30 valuation, they should continue to end their following years with a 9/30 valuation for that particular holding. And it's up to the board to decide how long they want to wait, knowing that there are, due dates for the annual statement and the cash books. But it is important if you do switch it, if you're already on one process or accounting method to and accounting only up through 9/30, to continue accounting up to 9/30. If you've historically waited for the December statement, you will have to continue to wait for the December statement so that you are capturing 4 quarters of activity within your calendar year.
So we have a few more questions that came in.
Yeah.
Just to confirm, I don't know if you answered this one already. We should
Yeah.
put 4Q reports in the month we receive them.
Mhm.
And does the 4 weeks due date apply to the December pre-close reports?
These are all very good questions. The Q4 reports, yes, correct. If you are receiving your December reports not until March 15th, let's say, and at that point, and in prior year, you also recorded Q4 before closing your year, then the recommendation is to also wait for your Q4 before closing current year. The 4 weeks due date, we do allow a little bit more, we're a little bit more lenient on the 4 weeks due date for the December, because we know that a lot more goes into December than the other months. But we are just stating the 840 CMR rules here, and per 840, it is 4 weeks. But we know, I think a lot of boards are also aware that we aren't as pressing on the December books as we are for, let's say, your August books.
And how do we transition from waiting for 12/31 to reporting on 9/30?
That is a great question, Ken. And that is a process. And I can definitely reach out to you offline on that. If there's more interest in that question, or if there are more boards that are interested in doing that, that's something that's maybe we can provide another meeting or discussion on for those boards. But I think I don't know if we want to get into it in this presentation.
Yeah, if it's going to be a long answer, maybe we can wait until the end to see how much time we have left. I noticed someone had their hand raised. If you could submit your question in the Q&A, we would appreciate it. I can't see who it was that had their hand raised, but I did see one hand raised, but I'm going to lower. And that was it, Sarita. Thank you.
Sounds good. Thank you.
Oh, you muted yourself,
Sorry.
Sarita.
And I'll turn it to Scott for the annual statements.
Okay, thank you, Sarita. So you've gone through the year, you've done 12 months of accounting, and now it's time to produce the system's annual statement. So I'm going to go over the 2022 version of it.
Scott, before you start, I had one question that came in at the last second. Do we need to check in at all, or is that info automatic? I don't know what that is referencing. Maybe that was for Sarita.
I think that was maybe referencing the check-in for the class, or that's how I read it, checking in for this webinar and training session.
It's automatic. Thank you. We will receive an attendee list, and Rose will update your credits in Prosper. You don't need to do anything. Unless you leave now, then you wouldn't have stayed long enough. Thank you. All right, Scott, over to you.
Okay. There's no new accounts this year, no new schedules. Annual statement's basically the same. We will be putting a blank one on our website. The only page that's going to look really different is the signature page, because boards will no longer be actually signing these the way they had in the past. But the signature page does still have the manager and the consultant and custodian section. So we are still collecting them. They're just going to look a little different. All right, next. Sarita went over the payables and receivables in her part, so I'm going to go over a couple of the other special entries that you make in December. And all three of these bullets have their own slide. So we'll just go on to the next slide. The unrealized gains and the unrealized losses. And we're talking about investments that are not pooled funds. So if you have a separate account for stocks or fixed income, at the end of the year, your custodian will give you an amount for the unrealized gains and losses. The summary sheet that you're probably posting from has a net amount, and we strongly encourage you to, instead of posting a net amount, post the actual unrealized gains and the actual unrealized losses. You can find those numbers inside the report. So you have to go away from the summary sheet and, look through that. Hopefully you look through that report a lot, but the info is in there somewhere. Also, if the custodian has sent you schedules 3A and 4A, at the ends of those, they have the total for the unrealized gains and the unrealized losses. There are some interfund transfers that you're probably doing at the end of the year. The first one here is taking money out of the pension reserve fund and putting it into the pension fund, because if your pensions are more than your appropriation, it's lowering the balance in the pension fund. And we don't want to see a negative pension fund on the annual statement. If you are unsure how much to transfer, just transfer enough to get the pension fund up to 0. And the second one here, if we can go back, yeah. The non-vested members who have been inactive for 10 years, this is an accounting entry that's actually inside Chapter 32. It's spelled out in Section 11, but their annuity savings fund gets moved over to the pension reserve fund. And, if they come back in 30 years, it's still their money. They can claim it, but we're just kind of getting it off the annuity savings fund for now. Okay. Interest due and accrued. Generally, this is people who have fixed income investments, separately managed fixed income investments. So look on Schedule 3A. The interest due and accrued is a column all by itself. So you can get a total there. It might also be in Schedule 1. Sometimes the custodial cash has some interest due and accrued. You probably do not have short-term investments, so don't worry too much about Schedule 2. On the next slide. So if you do have it, what are you going to do? And if there's an amount sitting in there from last year's annual statement, the first thing to do is to clear that out. So you get rid of that by debiting 4820, and you're going to credit 1550. That gets it back down to 0, and then you put in this year's balance. So you're doing kind of the reverse entry, a debit of 1550 and a credit of 4820. And you might have a question, what is account 4820? I don't use it during the year. That's right, you don't. It's the account that at the end of the year, all the gains, losses, and income flow through 4820. Those accounts close there.
I have one question that came in for you, Scott. What schedule do you put PERAC cash?
PERAC cash should be on Schedule 5.
Thank you.
Yep. Do not put it on Schedule 1, please. 5. Yeah, so that was account 4820. Once all the investment things close there and then get dispersed to the individual funds who require income. And what happens during the next year is when you get the interest, you book it to 4821. So if you did the 4821 entries in a different year, it kind of throws off the schedules versus the annual statement. So next, the supplemental schedule is the listing of everyone who has money in the annuity savings fund, and it shows the ins and outs throughout the year as a beginning balance and an ending balance. If you're not too sure on where the cutoff is for the deductions, go by the date of the actual paycheck date. So if a paycheck is December 30th, 2022, then those will be on the 2022 supplemental schedule, even if you don't get the money until 2023. If the paycheck is January 6, 2023, it's going to be on the 2023 supplemental schedule, even if the pay period itself is time in 2022.
Another
So,
question, Scott?
yeah,
If we have a fixed asset, let's say our office building, should that be listed on any schedule? And if so, where?
we don't have a specific schedule for an office building. That's something I would talk to the audit unit about. We have several CPAs on staff who can handle building accounting much better than I can. And you might end up just creating your own one-page thing to handle the building, but we'll get you in touch with someone who can answer that better. All right. The other thing about the supplemental schedule, as you try to balance it throughout the year, the one column that might be next to impossible to balance is the makeup column if you do have a receivable for the makeups. Because setting up the receivable, it destroys the relationship between the schedule and the general ledger. So you can't, it's not comparing apples to apples if you're trying to match that number. However, at the very end of the year, if you add, just take a pencil and add in the receivable amount to the bottom of the supplemental schedule, that total should match your 3293 balance on your ledger.
And just a quick note, if you have a question, please type them into the Q&A. So I think someone else has their hand raised. You can feel free to type your question in. Or send me a direct message if it's something else.
Okay, we can go to the next slide. There's a page at the front of the annual statement called the balance test page. It's 3 different ways of seeing here's what came in, here's what left the system, and theoretically it's supposed to be the same number for all 3. All right, now you have to stop the process because your balance tests do not work and it brings things to a halt. So how am I going to get my 3 tests to have the same number? The first thing I would check is to see if all your accounts closed correctly. If you have the post-close trial balance and there's either a receipt or a disbursement account that is not 0, then it is not closed correctly. So that has to be fixed. And usually if you have something that ends up, if its ending balance is 1,000 instead of 0, usually your balance test is off by that $1,000. So the difference jumps right out if that happened to you. The second thing to check is if on the investment income page of the annual statement, you have to manually type in the breakdown for the income. We break it down into the source of the income from fixed income, equities, pooled funds. So if there's a typo on that page, that will throw off the balance test. The third one doesn't happen too much, but it could happen if you mistyped an entry when you're doing the accounting, and say you put something in 5303, you wanted it to be in 5304, which is management fees. 5303 at this point is really a non-existent account, then that half of the entry kind of disappears, and that's how the balance test gets thrown off too.
Yeah, I have
So the
2
next-
more questions for you, Scott. Keeping you on
Okay.
your toes today. So I think this first one's more of a comment to that previous question. Says, I believe the building and or any other fixed asset will only appear on the asset and liability page and not carried to a schedule. And
Yes, that is correct, right?
And the next one is related to board signatures. If you had a board member change during the year or after 12/31, who signs the annual statement?
We do like to have the members as of 12/31 sign it. If let us know if that's not a possibility.
And can you share the checklist that the audit team uses in reviewing the annual statement? I believe we may have that online, but I'll check.
We don't have it online. I mean, it's in okay shape. I don't know if it's quite in good enough shape to send out to people, but yeah, I know we talk about it every year and just haven't quite gotten around to it. So maybe we will.
I think at one point years ago we did then.
Yes, yeah, but it's been majorly changed since then. So I mean, probably 90% of an old one you have is still valid, but yeah, we'll look into it.
Okay, stay tuned, folks. And should a building be listed on Schedule 6?
I guess so, because part of the point of Schedule 6 is to match your total, well, do you match your total assets? I mean, I guess we could figure out if Schedule 6 didn't match the assets, the difference is the building, but it wouldn't hurt to put it as its own line down the bottom.
Okay, thank you.
You know, on the list of stuff to do, we do have updating the accounting manual, and we'll probably put some more building stuff in the new accounting manual, but don't hold your breath waiting for that either. It's on the horizon somewhere. Okay. So back to the balance test. This slide has the other explanation that's probably the most common thing that happens is if you've made an accounting entry and part of that entry is a fund, so 3293 to 3298, then the other half of the entry also has to be a fund, with the exception of the closing entries, because that's how they work. But if you're doing an entry in May or September and it's a fund, it better be another fund on the other half. So I do have some examples on the next slide of what you don't want to do. So we're going to start with, say you're a new administrator and there's something sitting in accounts receivable that you look back 4 or 5 years, you can't tell when it was created, but 4 or 5 years ago, it was still on your books. It's $1,000. You have no idea what it is. Now we're just going to have you get rid of it. And, I do kind of hesitate to show people the wrong way, but I figured, all right, this top line, everything is wrong. I'm emphasizing that by even spelling wrong, so that you will not do what's on this first row. But if you debit 3297, your credit has to be another fund. So if you're crediting 1398, that's going to throw off your balance test. So now the dilemma is, well, I need to credit 1398. What am I supposed to be debiting? In the case of an old unknown receivable, we're telling you to debit 5589 administrative expenses. If you're writing off a receivable that you set up last year, you should probably use whatever account you used to set up the receivable. But in this case, it's an old one that we just don't know what it is. In the second situation here, there's a refund, and the person, because of the 2-year interest limit, had some interest that wasn't refunded. And when you issued the refund, you didn't do any accounting for that interest that wasn't refunded. So again, here, do not have one half of the entry be 3293 and the other half be 4822. The correct entry, if you're going to credit 4822, is you have to debit 5757 refunds. So that's something to look for if your balance tests are off. See if there's, just look at the funds and see if one of them has a second half of an entry that is either in the 4,000s or 5,000 or even 1398. So,
All right, I have a couple of questions that came in before we go on to the next slide.
Okay.
First, back to the building question. I don't know if you saw the comment that it's not a line item in Schedule 6. So maybe that's something that we just go back and revisit and talk about it in depth at a later date. This one, if a payment for December 2021 was voided in 2022 and repaid at a lower amount due to a late notification of a death, how do I balance 5750 and 5751? Is there a specific entry I can make? My general ledger for 5750 and 5751 in 2022 is off by the void for December 2021.
Yeah, this is the kind of question I get them a lot. I have to reread the email 3 or 4 times to do it. And should I write down what? Can you read it one more time? We'll see if.
So the payment for December 2021 was voided in 2022. It was
Okay.
repaid in 2022 at a lower amount due to a late notification of a death. So how do you balance 5750 and 5751? So that the general ledger is not off because of the void. So December 2021 was voided,
Yeah.
but then when it was repaid at a lower amount because of a death notification.
I guess I'd have to know, did they set up a payable for it if they voided it in December of one year? It seems like once you start a new year, it wouldn't throw off 5750 and 51, but then again, if your books are off by that, I think there'd be a couple follow-up questions. And
Yeah, and I have a comment related to that. First, this individual will reach out to you offline. And another attendee said, if you close 2021, you can't void it in the next year, but I think that's not what they said. Another question is, what is the 2-year interest limit on refunds?
By statute, if your money has just been sitting in the annuity savings fund account, when you request a refund of your contributions, you get interest a little bit after you stop working, but only up to 2 years after you stop working. So if you're coming in for a refund 8 years after you stopped working, then there's going to be 6 years of interest that does not get refunded back to you.
Okay, thank you. That was the last of the questions so far.
Okay.
Feel free to keep them coming.
So another place where the annual, you gotta be a little careful with the annual statement is, or we're going into things that you end up typing in manually. The interfund transfer page, the top half comes out of the general ledger, but the bottom half is a space for you to list every single entry involving 2 funds. And so you want to make sure that your descriptions on the bottom half, for each fund, it totals the same as you have at the top half of the page. And Schedule A, some of it you're putting in manually. The receivables go at the top by account number, and you should put a date for each receivable. That way it will pop out if something is 2 or 3 years old at this point, and you can think about whether it should still be a receivable or not. If you are doing one for people buying time, use December 31st, 2022 for that date. The payables go on the bottom, also should have dates. And we do have a bunch of blank spaces. They can be used for investments, or they can also be used for things where The list of accounts in the section might not be one you want, like the person who had the 5751, 5750 going on, if you overpay someone and are getting money back, you'd put it as a receivable, and you'd have to put 5751 on one of the blank rows. Next. All right, after kind of what we call the front part of the annual statement, with the receipts, disbursements, etc., there's schedules 1 through 7 go through all the financial kind of ins and outs, and whatever happened through the year, the buys and sells ends up on schedules 1 through 7. And so who puts these together? Schedule 1 is your cash. So you might get something from the custodian because the custodian has a cash account and managers have cash accounts as they buy and sell. But Schedule 1 should also have your own local bank accounts. So your checking account, if you have a money market or a deposit account. So Schedule 1 is all cash. Schedules 2, 3, and 4, the custodian does. Schedule 2 is for short-term investments. Schedule 3 is for fixed income. And Schedule 4 is for equities. And then Schedules 5, 6, and 7 is really board staff should be doing those. The custodian will send you a Schedule 5, but we tell people to ignore the custodian Schedule 5 because they tend to net income gains and losses. And we'd rather see individual numbers for on Schedule 5.
I have a comment in the Q&A. It says debit the cash and credit the expense in the new year, and then book the corrected entry all in the new year. I think that's related back to that previous question.
Yeah, that sounds reasonable. Yeah, because dealing with when you issue the new payment, right? Gotcha. I'd try that to start with. Hopefully that fixes your discrepancy. See, so the audit unit, we are doing annual statement reviews. I think we're doing them a little more timely as each year goes by. So what I just talked about with the Schedule 5, the custodian, we can't verify the individual gains or losses if we just have the custodial Schedule 5. Another common item is a supplemental schedule doesn't match the 3293 balance in the front part of the statement on your ledger. In that one, I mean, there's a number of columns in the supplemental schedule, so you might be able to pinpoint your error easily. Hopefully it's just one column that's off, or you can tell how much each column is off if it comes to that. So, next, something we see a lot, 5751 on the disbursement page breaks down the pensions into superannuation, the survivors, the disabilities. And PTG will put a number on top of the breakdown for the total. And there are cases where if you add up the breakdown, it doesn't come out to that total on the top. And this is because the number at the top is the closing entry from the ledger, and the breakdown comes from the monthly payroll registers. And in cases where you're either getting money back or something besides the normal monthly paycheck happens, if you do an accounting entry for it, but you don't make an adjustment in the individual member's record, that creates the mismatch here. So kind of like the supplemental schedule. On the supplemental schedule, every accounting entry needs to have the same thing happen on the schedule. So this is the retirement side of that. Every accounting entry needs something to happen in the individual's record. All right. Next. Are there questions, comments?
Yes, I have one question for you, but let's see. Are boards required to send bank statements and cash reconciliation to verify the cash balance on Schedule 1?
No, you don't need to include that with the annual statement. When we do our audits, we'll look at that on site, but you don't need to send us the cash reconciliation.
Okay.
And,
It's a nice touch, Scott.
that's
Okay, so.
I can't
don't
see
have any-
anybody. It's nice to hear them.
I'm sure everyone is sitting back and clapping. Clapping silently. So that concludes that, and you can go right into annual statement submission.
Yeah. Right. So as you've already heard several times, the 2023 ones are going to be sent to us via Prosper. First, I just have kind of an overview slide. Yeah. So if you go into Prosper now, looking for the things that I'm about to show you, you won't be able to find them. So we're aiming for March 1st is when you'll be able to see the stuff I'm going to talk about. It's a tab that says finance. It's going to be added automatically for existing users, and the form for new users will have that as an option. We do have a link to handouts for this presentation. That the handouts include screenshots, so you'll get even more than you're going to see now during the slideshow. And the annual statement submissions through Prosper are the same for every board. Sarita's going to go over the cash book submissions, and she's going to actually handle that in 2 presentations because it's going to differ depending on if you send us the cash books with PTG or if you use a different software or some kind of accounting program. So she's got 2 presentations. We'll do the PTG people first. All right. So you're an administrator. You're going to log into Prosper the way you normally do with your name, password, sign in, answer your security question. And so there's that finance tab over on the left between compliance and benefits. So that's what should be there on March 1st. Click on that and you have cash books and annual statements to choose from. So click on annual statements. And then there's a button saying submit annual statements. So click on that. And you're going to choose a year first. I know the slide says 2023, but don't worry. The drop-down menu has 2022 on it. So you'll be able to choose 2022 when you're in there. And click next. All right. Slowing down a little here. We divided the annual statement up into 4 parts that are required and then 2 optional parts. So the part that says annual statement, we don't mean the entire 80 pages. The annual statement, we're talking about the thing that starts with the cover page and the signature page, has the receipts, disbursements, income, Schedule A, even the membership count. That 8 to 10 pages is the annual statement part there. Then we have schedules 1 through 7, and the supplemental schedule is going to be its own submission here. Accounting close interest is the annuity reserve fund interest calculation. So that's got its own section. The optional ones, the thing labeled investors and consultants. So if you are one of those boards who has 15 to 20 managers and you send us a page just with all the manager names and addresses, that page is going to be submitted under that section. And then there's a thing for other docs if you need to send us something that we haven't spelled out there. All right. So you're going to upload the document. So you click on add attachment and click on browse. And you're going to find it wherever it is on your computer network there. So select the file. click add attachment. And then once it's there, you just hit close. And what had been a red circle before is now a green circle with a check mark, and the attachment is there. So it's going to be the same process for every part. Although notice that for the schedules, we are providing a template. So we want you to download the template. You should be able to just copy and paste anything from the custodian right into the template, but just make sure that the custodian's schedule headers match the template schedule headers, but they should. So you can just put them right in there.
I have a question for you, Scott, in terms of file type. Will it accept PDFs only or also Excel?
Ooh, I think that's the next slide, right? Is that the next slide?
Good timing for these
Try.
questions. There you go.
Here's the next slide. Yes. The schedules 1 through 7 will be the Excel format. Everything else, we're asking for readable PDFs. So a readable PDF is something that's just exported directly from your software. What we do not want you to do is print it out and scan it. Because if you print it out and scan it, yes, it's a PDF, but it's not a readable PDF. So just send us the things directly out of your software. Okay, next. So when everything is green, now it's time for the board members to sign the annual statement. Right. So the administrator should tell the board members go into Prosper and sign the annual statement. So if a board member goes in on the next slide.
Oh, sorry. I have some
Oh.
follow-up questions to the file type for the submissions. If we're already preparing schedule 1 through 7 in Excel, can we still use them? And again, related, I have my schedules 1 through 7 in Excel and they're all tied together. So I only have to put numbers in once. Do I have to use the template or can I attach my schedule workbook?
I think you should still use the template. You can just cut and paste everything. If you paste it as a number, it'll be fine. This will be something that'll probably be a lot easier next year once we've gone through what happens this year. But you shouldn't have to like retype any formulas. You should just be able to copy everything over. And it's gonna be one Excel file where each schedule has its own tab.
Mhm.
So
And then this follow-up question is related, but I guess you just answered it. Would it be possible for PTG documents to be used rather than the template?
No, we want everyone to use the template.
And do you have a preview of the template? I'm gonna go back to the document screen someone requested.
No, we don't have a preview of it in this slideshow, no.
So someone requested that you go back to this screen
Oh, okay.
and just go over this one more time.
Yeah, so in PTG, you'll be able to export the annual statement, the supplemental schedule, the annuity reserve fund interest. The schedules we want in 1 through 7, or in Excel. Yeah, which is why we're setting up the template. I mean, the template is based on, it's going to have the same headers as our blank annual statement has had for years. So whatever you've been doing in Excel, it should line up with the same columns.
And this last one says submit the same file on all 7.
Yeah, it's gonna be one Excel file with 7 different tabs. Yeah, I think in the past, some boards have done that. Other boards have sent in 4 or 5 different Excel files. I think when you get them from the custodian, they send you one with a bunch of tabs. So it's going to be similar to the custodian's format.
Okay, this is causing quite some activity in the Q and A file format. So when will the template be available? If these must be used and boards are already creating their files, seems like the template should be available now, not when we are uploading our files.
Well, it's going to be going on March 1st with everything else. So you can get your Excel ready and then just do a big copy.
Another comment regarding that is our schedules for A, B, and C are lengthy. So how will that work with the template?
I think you'll just be able to put the entire thing in there. I mean, it's Excel has lots of rows. I hope we don't have to worry about running out of rows.
And so this last one is a comment, and then I'll let you move on. I have a doc from an attorney that states that the current board member signs the annual statement, as every sitting board is responsible for the financial condition of the board. So we have always done the current board, and I think this was related to a question you answered a while back about who signs the annual statement if there's a board change.
Yeah, I mean, I guess it seems strange to me that if a board member started in March, that they would be signing something as of just, I mean, they could, I guess if you're new in March, you could still look at all the backup for the December 31st information, but you know, you weren't there during the year. I don't know, but yeah. I would still have the December 31st members on there.
All right, so going back to the presentation, is this
Yep,
slide
here's where,
that we should be at? Okay.
yep. Okay, so you're a board member now, and you see that you do have an item in the task section. So you get a task saying, you know, certify the annual statement. So click on that. And that brings you to this screen where you do get to sign off on it. It's the paragraph up at the top is the same paragraph that's currently on the signature page. And the thing that we've, the red rectangle there is a link where the board, where you can see what your administrator actually posted for the annual statement. So the board, you should look at that before signing off, obviously. You know, if nothing else, you want to make sure they didn't post like a grocery shopping list instead of the annual statement. But that'll take you right to the annual statement. Once you've verified that, yep, this looks good, I'll sign it. Then you type in your name, check off the acknowledgement, and click on sign document. And we're going to have all 5 board members do that. If you have a situation where someone on the board currently is like either a brand new member or you have a vacant position, we're telling people to contact Karen Shea and she'll deal with it. But yeah, for now, all 5 board members sign it, and once that happens, now the option to submit the annual statement is highlighted, so you can click on submit. And you'll get a message saying the annual statement checklist has been submitted to us. So that's it. And if you want to verify or check later, if you go to the next slide, you can see that the financial homepage will tell you what's been submitted. And if you have questions or problems with Prosper, there's the number to call or the email address.
Great, and I have some follow-up questions for you, Scott.
Okay.
Will there be something in Prosper that PERAC has reviewed the annual statement and it is okay?
Not this year. So the goal is just to collect them this year, and then we're hoping next year that that kind of verification can happen. And this is part of the reason we're having you send the schedules that specific way, is so that to make it easier for us to actually do our checklist, within Prosper, and I suppose send you back something. So.
Next question, Lawrence is closed. I'm a bit confused. Are we submitting the pre and post-close December 2022 through this Prosper new tab, or can we submit like we did previously?
All the accounting can go through the way you previously did them. Yep. I think it's,
Oh, go ahead.
yeah, it's January 23 where the cash books are going to start going through Prosper.
Okay. After all the board members signs, is there an ability to print off a fully signed page through Prosper?
I don't think so. Maybe. I mean, that's something we can look into if.
Yeah, we can ask the developers about that
Yeah.
to see if they can, if it's not possible, if they can add that to a to-do list. Does the annual statement need to be approved at a board meeting too?
Yes, I'd still have them vote on it at a board meeting. Because before you would have hopefully approve it at a board meeting and then sign it physically. So here you're going to approve it at a board meeting and sign it electronically.
Okay. And I think John said he would answer one of the.
Yeah, it looks like John is saying it. Once the board member leaves, their Prosper account goes down. So yeah, a situation like that, call Karen Shea.
And are you still expecting a hard copy when you come in
No,
signed? Okay.
no, but we should not get any hard copies this year. Don't mail us anything.
Okay. All right, so thank you, Scott.
You're welcome.
And Scott will be around to answer more questions.
Thanks, Scott. I'm going to kick off the process for the cash books. Before I do so, I just want to make mention, I know it relates to earlier questions about the 4-week deadline on the December cash books. I know that for the purpose of this training, we are stating the current regs, just so that folks are aware. We are, there are updates to the regs that are currently in draft form, so stay tuned for that. And those updates do kind of also cover the cash book deadlines as well as materials for the cash books. So definitely stay tuned for that. I just wanted to make note of that before I go into the Prosper section. So
And
for the,
Rita, I'm sorry
yeah,
to interrupt you. There's one more question that came in related to Scott's presentation. Would we have to produce a PDF to present to the board? So I would think they would see that in Prosper, no?
Yeah, I haven't really thought through the actual, order of things. But if you're sending us a bunch of PDFs, I think you could send those to the board as part of their monthly packet, so they would see the same things that you then just throw into Prosper.
Great, and we'll have time for additional questions at the end as well. All right, Sarita, thank you.
Okey doke. So the login process will be the same as kind of all your typical Prosper login process. And as Scott mentioned, that new finance tab will show up on March 1st. And there you'll find both the cash book and the annual statements. So once you click cash books, you'll go to the next slide and also click submit your cash books. Once you click submit, this will create a new period for which you're submitting your cash books. So here you'll have drop-down menu of, you can select the month and the year for which you're submitting your cash books. And once you create the period, you'll see it'll open up to this window where you'll have the 5 required components as well as an additional one for additional documents. Scott mentioned when you create a period, they'll all be, the red dot will show up in that complete column. And if you notice there, the submit is grayed out. But once you click that first, when you start submitting them, you'll click on that first one, which happens to be trial balance. You'll click add attachment. Browse. And then depending on where you have all your files on your local drive or network, you'll select the trial balance or corresponding report that you want to upload. You'll add the attachment. And unlike the annual statements, Prosper will do a validation check on the reports themselves. So please ensure that they are, we'll go through the report file types in a later slide. But some of the validations that Prosper will do behind the scenes once you upload the reports, it will verify that the report you are uploading. So if you're uploading a trial balance, it will verify whether the report name on the upload file does in fact say trial balance. It will verify the board name and the period that you're submitting it for. So if you're uploading for January, but in this example, you're uploading a February trial balance, it will kick out an error message to you. The error message will also detail what's wrong. So if you don't receive any error messages, it'll bring you to this screen. The report has queued up. If you hit save, now you'll see that in that complete column, the trial balance has been successfully uploaded. You'll also see a little like icon in the attachment column, and that's a clickable icon. So should you ever want to review what you just uploaded, you can click on that icon and it will open up the PDF that was just uploaded for it. Likewise, if you want to go back to a prior period and review what reports were uploaded for it, you can also always go back to a prior period and click on that attachment file to upload or to see what you've uploaded. I'll just speak to the last of that slide. It's the same process for all the other reports. And so in terms of the formatting of the reports that should be uploaded, they should all be in readable PDF format for all 5 of the cash book components. The only thing that is not, doesn't have like a required document format is the other docs. So boards can feel free to attach any other documents along with that month's cash book package, should it be additional material such as a cash recon or additional trade tickets or any other materials, because those file types are kind of broad. We left the format limitation kind of not required as part of the other docs there. And then I'm seeing a few questions, Natasha. So for cash books, Jess, this process isn't going to start until March. It won't go live until March 1st, but we are only anticipating to receive any 2023 or January books uploaded to this Prosper process. So definitely continue to send all of your 2022 reporting to that PER Cashbooks email address. And then we kind of start fresh with 2023 for this Prosper process. This Prosper process will be replacing the current email process for starting with 2023. And it looks like amended, I'll touch upon amended or corrected monthly cash books in the next couple of slides. How long does Prosper retain the documents? That might be a question for our developers. I'm not quite sure how long Prosper holds the documents for. And I have a question here about, do we only upload a year-to-date trial balance? Do we need a month-to-date trial balance too? So in this case, the requirement is a year-to-date trial balance. If you try and upload it a month-to-date trial balance in that field, it will error out. It won't allow you to. But if you are submitting a month-to-date trial balance along with your cash book package, that would be something that you would include in the additional documents. Lastly, we currently, and there the correct format. So that's just a statement. Okay. So moving on, once you've uploaded all 5 of your required documents, you will see that the submit button is now available. So you can click submit. If you only upload 4 of the 5 documents, you will not be able to submit your cash books. So all 5 components are required in order for you to submit a cash book package. Once you've hit submit, you'll receive this message of completion. And then if you aren't sure, if you missed the message of completion, you can always go back to the financial homepage where it'll list out all the periods that you've created and submitted for the cash books. Here we've highlighted that we've just uploaded for February. This screen kind of gives a preview of the next slide, where PERAC, as we do currently, we can either approve or reject submitted cash books. And here in the new Prosper process, you'll see that January can be rejected, and it could be rejected like once we start reviewing the cash books. If we identify an issue with it, we can reject it within Prosper as well. Once we do that, a message will be sent back to the admin. So you'll see that we've rejected it. When you log into Prosper, you'll see that on your top screen as well. I think that might be highlighted in the next screen. Yeah, so when you log back in, and these are all screens from the test environment. If it's rejected, you'll see the alert at the top of your screen, and it'll also explain why it was. When we reject it from a PERAC perspective, we have the ability to put in notes and detail out the reason for the rejection. So if you do receive a rejected cash book and you've kind of identified, spoken with the investment analyst and corrected your cash books, the next step is to resubmit them. So if we go to the next slide. There's no way to, once you've submitted a cash book, there's no way to withdraw that submission. So it will stay logged in Prosper for the life that it's out there. So if you are resubmitting, you'll need to create a new submission. If you are submitting for a period that you've already created for, you will receive a warning message, but you can click OK through the warning message. And then it should bring you to the next screen where kind of go through the same steps as setting up or creating a new process or a new cash book. And here you can see for February, the far right column has a submission number. The first one was rejected, and then the second one was submitted. And that kind of concludes this portion of or today's training for and all of the PTG members or PTG boards or boards that are using PTG. We do ask that the non-PTG boards stick around for another minute or so, so that we can kind of, the Prosper screens will look a little bit different for you. But I am just gonna pause to take any questions that came up. So where did we leave off?
So let's see, they were coming in fast. I'm gonna
Yeah.
leave that first one. John said he wanted to speak on that, so I'll leave that one there. I think we answered the one, do we have to produce a PDF to present to the board? I believe Scott responded to that. Not sure what the no on site was referring to. And why not have the board sign both? I think that was a question for Scott as well, referring to the annual statement.
Mhm.
Well, I suppose if you want to print one out to have it in the office and have them physically sign it, you can go for it. But just when you're sending it to us, it has to be this way.
Okay. And Sarita, I believe you answered this about, do we hold off on January until this is live? And you answered that. And readable PDFs, I was going to type in the answer and I accidentally said I would answer live, but yes, readable PDFs, not scans. Do we still send the monthly cash books to PER cash books? I believe you answered that as well, Sarita, right?
Yeah, so just starting with 2023, if you're uploading them in Prosper, there's no need to send it to PR cash books. Definitely starting 2023, this Prosper process will be replacing the email. So just, I know we're in kind of a transition period, but definitely continue sending any 2022 related materials to the email. Any 2023 materials should be uploaded to Prosper. If you're already ready to upload, but prior to the March 1st upload date or live date, I would just say hold off on sending anything for 2023 until this goes live or Prosper goes live.
And I believe you, Sarita, you also touched on this, only a year to date. Excuse me, don't you need month to date as well for cash books?
Mhm. Yeah, so if you're submitting month to date trial balance, that should just be uploaded in the additional documents field.
Question on monthly submissions, please confirm that I think GL is referring to general ledger that is required is a month to date.
So yes, the GL is a month to date range. And I don't know if we can go back to any one of the screenshots where it lists the documents. But in Prosper, it will tell you which reports should be month to date or year to date.
Is this?
Or I guess it doesn't. Yeah, this is a perfect screenshot. So so here, I guess it's just trial balance is the only different one. So it should be if you're submitting a monthly cash book, if it's not annotated with the year to date, it's assumed that it's a month to date range.
Don't you need month to date for the cash book balance reconciliation? So you would do that in the other docs section, as you mentioned, correct?
Mhm.
Okay, I think I already asked that one. Where will the quarterly investment reports be sent to?
The quarterly investment reports can, so those are, I kind of classify those as like similar to the manager, consultant, and custodian statements. So those will continue to go to your respective investment analysts, whether that's Veronica or myself.
Okay. My software only has a TB and GL report. How will I submit?
If it is, this is a anonymous question, so I'm not sure what board is asking. If it's a PTG board, PTG should be able to provide the other reports as well. I'm assuming this is a non-PTG board, and so we do ask that you kind of sit tight. We're going to go through that process in a little bit.
When submitting amended trial balance, do you still have to upload all the other reports again?
Yes, yes.
Will submitted cash books be sent to board members for viewing as well?
I don't believe that notice. I can touch base with our developers just to see if board members also get like a notice when they sign into Prosper, so that they are aware when cash books are submitted. If it's not, and that's, if you'd like to see that, if admins would like to see that, that can be an ask that we put in to kind of build up Prosper.
Okay. Question on monthly submissions. Please confirm that the general ledger that is required is a month to date.
Yes. So the general ledger on the monthly submissions, yes, all other reports besides the trial balance should be month to date. The trial balance needs to be a year to date.
If you made an error in adjustments and need to resubmit, I would normally resubmit the adjustment and trial balance. Will you require a submission of all the cash books for that month or only the one that had an error? I think you just answered that same question.
Yeah. Unfortunately, the answer is yes to that because there's no way to rescind a submitted cash book submission. If you're submitting a revised cash book, you will just have to, it's essentially like submitting a brand new set of cash books. So as part of the Prosper requirements, it will only allow you to submit it once all 5 components have been uploaded. If the adjustment or the correction is only located on the adjustment file, then, I mean, you can still upload your prior cash receipts disbursements report, but your change will definitely impact a trial balance, your adjusting report, as well as the GL report. So we would probably need all 3 of those new ones, but if you're pulling reports to upload from your local driver network and the change is only affecting the adjusting, then you don't have to rerun a cash disbursements or receipts out of PTG again if you don't want to. But we do, once we receive these reports in Prosper, we still apply the same process. We do run a trial balance flow check once we do receive these reports. So if one of the 5 reports aren't updated and doesn't reflect that change, we'll kick it back to you again. So just ensure that when you're uploading revised reports, that all the reports uploaded are in fact reflect the revised activity.
Thank you. So I'm scrolling back up to a previous question that I think I skipped over, but maybe you answered it already. It says, do we still send the monthly cash books to the PER email address? So until it goes live for 2022, they're still using this address, correct?
Yep.
Or is that okay? This was answered. Annual statement question. So Scott, you might be back on here. Is there a way, once the board members have signed the annual statement? No, I asked that one already.
Okay.
Oh, never mind. Can you share with the audit unit annual statement and cash book submissions to help with the PERAC audit?
I'm sure the plan is for us to be able to see them so that, right, it would be much easier for us to look at them than it currently is.
Do they want a signed copy on site when they come in like they do now?
No, we don't need to see one. We would just be grabbing, right now we're taking what you submitted to us. And we'll just continue doing that. But now we'll be grabbing it in Prosper.
I guess this is a critique. Who's taking screenshots? I'll pass that on to whoever's doing that. Thank you. Do we submit the investment capital reports to Prosper along with the monthly cash books?
The investment capital reports, those should continue to go to your respective investment analysts, so whether Veronica or I.
Will we no longer need to submit pooled fund worksheets?
If you are currently submitting the copies or the actual investment manager statements themselves, then there's no need to also submit a pool fund worksheet, which is going to detail the same information. However, if you are not currently sending copies of those manager statements to PERAC, then we do ask that you continue to send us the pool fund worksheets for those investments.
I think that is it. So we already answered. So I have a response to how long the annual statements stay on Prosper. Right now, there is no rule that's built into Prosper for deleting anything. But I guess it would technically be according to the legal retention rules. But as of right now, Prosper does not delete anything, but stay tuned on that one.
It's forever in the World Wide Web.
Exactly. So I believe we have answered all the questions that came in through the chat. Again, there is a hand raised, but we need you to submit any questions through the Q&A. John, I don't know if you wanted to come on and respond to a question before we close this out and let people go on their way, except for the non-PTG boards.
I can. What is the question?
It says, are you still expecting a hard copy when you come in signed? And you said that you would answer this question live. So I don't know if you just had a comment related to that question.
I didn't. There was a question about who signs the report. And I believe it will need to be the active members on the board at the time that the report's being finalized, because the prior board member will no longer have Prosper access. So the only person that will be able to sign are the 5 active board members. So I think Scott answered the question about hard copies on site, and we'll just be drawing them down from Prosper in the future, the audit staff.
Okay, and 2 more questions came in. Karen Shea wanted wet signatures on annual statements. Prosper will now void that. Is that correct? And I think this is also related to the recent regulation that we just had approved.
That's correct. You don't need to send us a separate signature page anymore.
We have a new regulation that allows for electronic signatures, so I think that's related to that as well. When private audits are done, will we need signed copies of the annual statement?
I don't know. That's a question for the private auditors.
Okay. All right, so I'm going to fast forward back to the final presentation, and board members who are still on, feel free to enjoy the rest of your day. Thank you for attending. PTG boards, feel free to stay, but also feel free to leave. This will, we're just going to go through some final steps for the non-PTG boards. Again, thank you everyone for attending. And I will hand it off to Sarita. Thank you.
Thanks. We'll just give it a minute or so, just so that for the folks that are exiting, just let them exit. I guess we can kind of slowly skip forward, as the login screens will be exactly the same as all the ones that we've done before.
Okay, I think you can get started.
Okay, sounds good. So thank you for all the non-PTG boards that are sticking around. Definitely, I think the login screens are all the same, so we can kind of skip forward right to the Cashbook landing page. Because it will look a little bit different once you've hit the submit button and select the period that you are uploading or submitting. So up until this point, it'll all look the same. Your login, select Cashbook, select what month, what year you want to submit your Cashbooks for. Click next. And here, unlike the PTG boards, you have one item, one required item to upload. This is just taking into consideration that the non-PTG users are currently using a mix of, or their reporting is currently coming in a mix of PDF, HTML, and Excel files. So from here, we only have one reporting upload. So once you click that Cashbook documents, it will lead you to this page where you'll select or click add attachment, identify, click browse, and you can identify which file you'd like to upload. And here we'll click attachment. Once it's queued up, you can save it. And it will, if it checks out everything, you'll see that there'll be a green check mark in the complete column. And then like the other screens, the attachment that was uploaded will also be visible and available to click to open under the attachments column. Once it's complete, you can click submit. And you'll receive a message of completion. And should you miss this flash message, you can also go back to the home page and you'll also see what period you've submitted or created on that Cashbook homepage as well. Likewise, as I mentioned before, after we start reviewing the books, we have the option to approve or reject it. And if we do reject it, you will receive the same message or a message in Prosper that we've rejected the Cashbook. And that when you log in, the next time you log in Prosper and you click on the Cashbooks, on the next slide, you'll see at the top, you'll receive an alert with a reason why a specific Cashbook package was rejected. And once you're ready to resubmit, it will be the same process. You will have to create a new submission. You'll receive a warning for creating a submission for a period that's already been created. You can click OK to that warning and proceed with uploading the revised document. Once you've uploaded, you go back to the home page, you'll be able to see here that for January, the first submission was rejected and the second submission is also located there. So not too much different for the non-PTG users. It's just that there are less restraints on the document types. And then definitely if you are anticipating switching to PTG, we do ask that you kind of give us the heads up so that we can change that setup for Prosper when you do. So I think that's kind of it for the non-PTG section. Hopefully we didn't keep you too much longer. Doesn't seem like there are any additional questions coming up. If not, I guess if you do have any issues with Prosper once it does go live, feel free to reach out to the normal Prosper help desk. If there are any questions about accounting materials, definitely continue to reach out to Veronica, myself, or Scott for annual statement questions. And this concludes our training for today.
Yes, thank you, everyone. So again, any board members who were in attendance, you will automatically receive your 3 credits. The downloads, they're in the chat, but they're also on the website under the event page for you. And we will also have a survey that will pop up on your screen. We do appreciate your feedback because we read all the comments we receive. And we're constantly trying to improve these webinars for you. So if you could take 5 minutes to just respond to the survey, we would appreciate it. If you can't do it right now, don't worry, we'll send you another email with the link to the survey. All right, everyone, enjoy the rest of your day. Thank you.